Welcome to the NEI 500 CEO interview program, where the senior management from select listed companies will share their insights with the audience about their company's growth potential. In this part 2 of the interview, CEO Derek White will continue to talk about the recent developments of Ascot Resources, its vision for the company, and also the future milestones. Ascot Resources is a gold development company focused in the Golden Triangle in BC, Canada. A few highlights our readers should know before watching the interview. Golden Triangle in BC is a prolific gold mining and exploration jurisdiction. Ascot is fully funded in the project financing plan for its upcoming mine. The company has a lot of mine building expertise in its management team to transition itself to a producer. Ascot still has growth potential in its upcoming exploration program. The stock has been trading from 50 cents to $2 in the last few years, but recently has risen back to $1 level due to a lot of positive developments. If you enjoy our video, please like, comment, and subscribe to our channel so you can stay alert of our future content. Yeah, you just mentioned about the M&A activities going on there in the regions, like Newmont just acquired GT Gold and also Yamana Gold investing into your company. So what does it really mean in the region in terms of that kind of M&A activities, especially in Ascot?
I think the big situation in the Golden Triangle is infrastructure and permitting timeframe. And bigger mining companies like Newmont and Yamana and others, and Newcrest, who bought Red Chris in the first place, are looking for less risky opportunities. So in other words, if you're a junior mining company that you're basically trying to advance a project, the risk profile is quite high. So in other words, you have permitting risk and construction risk and financing risk. And in the case of Newmont buying GT Gold, that's right next to Red Chris. And so what I think you're going to see is people being attracted to areas where there's a risk profile that's going to be way less over the next little while. So in other words, if there's a project next to a mine, or there's a mine that's going to come into construction, and that's really why I think Yamana was putting the investment into Ascot, is because they see the risk profile dropping as we come through the permit amendment and construction process. The risk drops, and although the value of the company may go up, it's more in line with the strategy of a big producer who are really looking to add production ounces into their fold and into their investments into their company, whereas a junior exploration is at the early stage and has a lot more risk. So Ascot really is right on that piece where it's going to reduce its risk profile very dramatically over the next year, and it already has, by putting its financing in place and submitting its permit amendment and having the infrastructure it has. And that's one of the reasons, in the Golden Triangle, there's just not that many of these opportunities, which really makes Ascot special and unique.
And recently, your company had 2 major financings, pretty substantial capital there. So what are the purposes of these 2 financings?
Well, at the end of November, early December, the company put $105 million debt financing in place, US, and to start the lion's share of the production. As we've gone through COVID-19, we updated our capital estimate at the end of March and to increase the capital to 176 million Canadian, which is still very, very low for a project of this size. And the second financing was really to shore up the equity component of that. And in addition, with the Yamana money, that gives us a bit of buffer and allows us to do some of the exploration and underground development that we want to have ahead of the project. So by putting these 2 financing in place, we are now fully funded to execute the project back into production.
So what are the major milestones investors can look for from Ascot in the next 12 to 18 months?
Yeah, I think as we move into construction, I think a couple things. The first one is that we'll start the early works really in the beginning to middle of June. And that will be, we'll start the preparing of the mill. We'll receive the ball mill and the SAG mill delivery. We'll also start the exploration, and we have, the underground mining permit as well. So you're going to have quite a lot of different things happening. You're going to have the construction of the mill, you're going to have the underground exploration and development, and you're going to have the exploration on surface as well. And as that kind of goes through the summer, the main permit amendment should happen at the end of August. And then the full-on construction of the plant refurbishment would start in roughly in September, and it would complete over 12 months. So basically at the end of August 2022, and then we're back into production. And so what we're hoping to do is continue the drilling throughout the year from underground, advance a number of the opportunities we have to increase the size of the mine plan and the resources that we have, and continue to reduce the risk by refurbishing the mill and the site for production.
So what's your vision? What's Ascot's vision here in the Golden Triangle?
Well, I think, just like we have in the past, I think the very step one of the vision is get back into production and start producing money. And so at these gold prices, I think the team is pretty excited about, getting the mine back into production. So in the short term, step one is focus on making sure that we, deliver the execution of the refurbishment of the mine and get it back into production. At the same time, and beyond that, we think that there's a lot of exploration opportunity for us to increase the size of the gold reserves and gold resources that exist at the site. And so I think step two is to continue to advance both from surface and underground the exploration potential and development of additional gold at the project. And I think step three, which is really as we go into production, is to utilize this infrastructure to consolidate some of the other players around us. And there's no point there's a number of other companies that have smaller deposits that are not going to build the infrastructure. And there's true synergy value in building a larger gold camp, in this southern part of the Golden Triangle. And so I think, all three of those things are part of the vision of building a really robust and attractive and highly valued company, which I think management can see.
So before we conclude, we'd just like to get your take on the gold price here, because you've been around long enough in the mining industry. You've seen gold price going up and down. So what's your thoughts on recent volatility in the gold price, and what do you think in the next 5 years we'll see in the gold price?
Well, I think, there's a couple things. In the short term, the US has printed a lot of money and has been trying to sell more treasury bonds. And in order to sell those treasury bonds, they've been increasing the interest rate of those treasury bonds. And that had a negative effect on the gold price. And so a lot of US hedge funds and other money started to pull out of gold and go into the bonds because they were attractive. The problem for the United States and the rest of the world is the printing of money is pretty difficult, because if you amass too much debt, you raise the interest rate, you cripple yourself. You put yourself into bankruptcy, which the US can't do. And so to some level, we really don't see interest rates in the long run being able to go much higher. And unfortunately, even with all the vaccinations and everything, COVID isn't over. What we're finding in Canada is we have some of the highest rates of COVID right now. We have variants coming from Brazil. And so although there will be a rebuilding of the economy, there's still a lot of uncertainty out there and a lot of risk. So the weakness in the US dollar, the weakness in other currencies, the printing of money, and the fact that COVID-19 isn't really over, I think bodes very well for the gold price in the medium to longer term. And we have seen recently the gold price come back again, but I do believe that real inflation, the printing of the US dollar, and effectively the weakening of that currency will ultimately see gold prices do quite robustly over the next sort of 3 to 5 years.
Indeed, I cannot agree more with your comments on gold here. So again, thank you for your time, for sharing your insights with us here today, Derek.
You're more than welcome, Gilbert. Thank you to having me on your program.
Sure. We'll see each other until next time. Thank you.
Okay. Bye-bye.
If you enjoy our video, please like, comment, and subscribe to our channel so you can stay alert of our future content.